this week's last edition of Targets in Focus, I'm joined by Senior Currency Strategist Richard Franulovich from Westpac in New York. Hi Richard, it's great to speak to you again. So tell me, what kind of performance are you expecting for the euro-dollar over the next 12 months?
Okay, we remain wedded to the view that lower levels in the euro beckon. It's had a surprisingly decent bounce this week, close to 3 cents now almost, on some firmer global data, some hopes that this Greek PSI, the public sector involvement in Greece's debt restructuring, will pass through, and somewhat better performance from risky assets in general has helped inflate the euro, but we would tend to fade this strength. We do see the possibility that it could trade up through 130 and onto around 131, but thereafter we'd be looking to reopen shorts in euro, looking for it to trade back down to 124 on a 3-month horizon and 120 to 122 on a 1-year horizon.
UK inflation figures released this week show inflation pressure easing, which will probably open up the door for further monetary policy stimulus next month. In that case, how do you see the pound dollar performing going forward?
Right, we see the pound as its fortunes closely tied to the euro. There's every chance that the BOE will roll out an expanded or increased asset purchase program in the coming weeks. And if the Eurozone economy underperforms as substantially as we think it will in the next few months, as we tip into a recession, that's probably likely to be worse than what consensus expects. That will keep the UK economy under a lot of pressure. So all that combined should keep sterling under a lot of pressure. It too has seen a bit of a bounce in the last week or so, but we don't expect that bounce to have any sort of sustainability around it. So much like the euro, we do see some scope for a bit of a squeeze in the very short term, but we fully expect on a 3-month horizon it could be back below 150. In fact, trading down into the mid-140s on a 6 to 12-month horizon.
And finally, Richard, I would like to discuss dollar-yen. This pair has been stuck in a pretty tight range for a while now. Do you see this pair breaking out this range in the short term? And what about in the mid to long term?
Yeah, dollar-yen has been comatose for some time. Our basic view of the world is that 2012 will look a lot like much of 2011. It's a world that is pretty defensive, and it's not a particularly positive environment for risky assets. We fully expect some of the recent better US numbers to give way to weaker numbers, given the still substantial headwinds facing this economy. We also expect China to underperform expectations on growth, and indeed for Europe. Now, in that sort of a world, bond yields remain low, equities don't trade very well. That's generally a world where the yen is a pretty strong currency. So against that backdrop, we expect this tight range in dollar yen to eventually give way, and for dollar yen to trade down through 76 to retest its lows of October 2011 and ultimately head down into the low 70s.
Thank you very much for sharing with DukascopyTV some of your latest projections, Richard. As always, there'll be fresh editions of Targets in Focus next week, but for now, goodbye.